Trickling in. Welcome, everyone. My name's Chad Gardner. I'm one of the vice presidents of the Consumer Advisors here at Innovation Federal Credit Union. Glad to be able to provide this opportunity for us to present on financial literacy. Very excited today. The sun's shining out there, so hopefully it's a beautiful weather where you are as well too. And we'll get going here. So today we kind of wanted to talk about a few things. Before I get into the agenda real quick, I do want to introduce a couple of people who will be walking you through the presentation today. We have two of our fabulous consumer advisors. We have Erica Mondahar from Regina will be joining us this afternoon, and we also have Jillian Keller from North Battleford. One of the other consumer advisors here in North Battleford will be joining us as well too. Some of the things we want to talk about today is just about the industry, the types of financial institutions that are out there, common financial products and services. We want to have a conversation and some tips and tricks around credit and debt. How does credit work? How you as a student can build a credit score. Some information on student banking, and then how you should go about selecting a financial institution. I know at Innovation Federal Credit Union, we'd love to be your provider, but there's many options out there, and there's things that you need to look at and think about. And then we'll take the time. We do want to be able to pump our tires a little bit, and we will talk a little bit about innovation at the end there. But in essence, the purpose of this webinar is just to provide some more financial literacy to you students and how you can help achieve financial success in the future and start building that foundation for the future. Okay. I do want to take this time before we continue to acknowledge that in the spirit of truth and reconciliation, we acknowledge that we are on the traditional territories of the many First Nations, Métis, and Inuit who have graced these lands for millennia. We are privileged to live on, work on, and enjoy the benefits of these lands now known as Canada. And with that, I'm going to pass it off to Erica.
Okay, great. No, thank you so much, Chad, for that wonderful introduction. And again, thank you to everyone that showed up today. I just want to say how excited I am to be one of your speaker, and I'm glad that I'm able to do this. I love helping students like you guys be confident in achieving their financial goals. So before I start, I just wanted to say that this is an open space, so please feel free to put your thoughts in the chat box, utilize the raise hand button, or just simply unmute your mic if you have any questions, okay? And yeah, with that, let's dive right in and start building your financial confidence. So, for our first topic for today, I believe this is one of the most important foundations of financial literacy. And that topic is understanding the different types of financial institutions. So, as you may already know, there are various types of financial institution across Canada. But in this session, we're only focusing on the five most common types, starting with the credit unions. So, in a simple word, I will put the credit unions as a member-owned cooperatives because they exist mainly to serve their members rather than the outside shareholders. So credit unions, they often provide you with lower fees, better interest rate, and a more personalized services because they value relationship building with their members. What I like about the credit unions the most is that they are deeply connected to their communities. So if you can think of something like offering scholarships with students like you, profit sharing or rewards, credit unions is the best place for you. So aside from that, credit unions also makes donations to their community. So they sponsor hockey games, their local market and businesses. And then the best thing as well is that they offer employments in small communities. So as you know, credit unions, most of our branches, I would say are, because I am a part of a credit union as being an employee of innovation. Most of our branches are scattered across the small communities in the provinces of Canada. And by building those branches, we are able to boost the employment in those small communities. And yeah, on the other hand, in here, we have here the examples that we have put into the slide to give you an example of the companies that is built around Canada for the credit unions. And on the other hand here, we are also going to talk about the traditional banks. Most of you will be more familiar with the traditional banks because in this example here, you may already notice that they are the big five banks. So they offer everyday banking services such as checking accounts, savings accounts, mortgages, or even investing opportunities. So it's not like credit unions are not offering those services. It's just that this is the main services that banks offer. So that's why they are most familiar with some of you, and their branches are typically built around the big provinces in the Canada. And so, unlike credit unions, the banks are investor owned. So, instead of sharing their profits within their community, their profits are being shared to their shareholders. And that sometimes leads to higher fees, and their strategic decisions are aimed at making profits for their shareholders instead of their community. But nonetheless, they play such a big role in our economy because they facilitate transactions and lending services. And to our next slide, please. Thank you, Chad. In this slide, we're also going to talk about the insurance companies, digital banks, and financial firms. So, insurance companies, they mainly help people and also businesses manage their financial risk. So, they do that by offering protections such as life insurance, home insurance, car insurance, and etc. So, by offering those protections, they charge you premium, but the main benefit is that you are able to transfer your financial burden of the unexpected events. So unexpected events such as passing of a family member, loss of employment, illnesses, and even property damage. In other words, I can say they provide protection for you, your belongings, and especially your family because they play such a big role in your financial planning because they allow you to prepare for the unexpected. And then the next one here is the digital banks. They are also called online banks, and that is because they entirely operate online. They don't have physical branches, but they offer the same services such as the checking account, savings account, what the typical services that the traditional banks and credit unions are offering. So what separates them the most from the other FI is that they have lower fees because they don't have the same operational costs compared to those that have physical branches. I would consider them as one of the fast growing institution because they have the capability to reach larger demographics because they focus heavily on their digital banking improvements. So think of something like online banking, online bill payments, and then online loans, applications and investments. So there are the things that they usually do. And lastly, here we have the financial advisory firms. So they are mainly helping individuals and also businesses plan and achieve their long-term goals. So the best example that I can think of when it comes to this type of institution is our very own Innovation Wealth here at Innovation Federal Credit Union. So our Innovation Wealth, they are consisting of wealth planners, wealth advisors, and even wealth specialists. They help you plan for make wealth planning, investment planning, retirement planning, and even tax strategies. So our wealth planners, they sometimes work independently or part of a larger investment. But in this case, our Innovation Wealth, they are part of a larger investment companies because they are part of our side of Innovation Wealth. So their role is to provide mainly an expert advice so that their clients are making informed decisions. And then the most conception about the wealth planners is that you have to have thousands of dollars to like meet with them or book an appointment with them, but that's not the case. So if you have like a bank that you know they have a wealth side or you are interested in innovation, I know we have our innovation wealth as well. You can just simply go into the branch, simply ask for a wealth advisory appointment so you can have a conversation with them and know what the plans are for your future. So before I move on to the next slide, is there any questions that you have so far? Just gonna go check the chat here real quick. Okay, no, I don't think so. Well, let's just move on to the next slide. Okay, so now we are done talking about the types of institution. We're also talk about the financial firms and things like that. We're moving on to the most common financial products and services. So here we have the checking accounts and the savings account, with the checking being the most common product that most banks will offer you when you open an account. So checking accounts, it helps you manage your everyday expenses. So if you can think of something like bill payments, e-transfers, salary direct deposits, or in your case, you might have government grants that you are receiving. You can also use that for a checking account. So it's an ideal account for basic transaction because most institution they offer unlimited transactions with no fee. And then on the other hand, here we have the savings account. It's a contrary to the checking because they're different. They offer interest earnings, a small interest earnings, because the checking account they don't have interest earnings. So this type of account, this is ideal for those who are looking for a temporary or a short-term savings. So if you can think of something like a vacation, a big purchases, or even emergency funds, those are the type of accounts or transaction that I will use the savings account for. So I guess this is ideal for that type of account because it doesn't have limits on money withdrawals and there's no limit with how much money you can save on this type of savings account. Okay, so let's move on to the next slide. Okay, great. So now we are done talking about the institution and then the product. We're going to talk about the fees that those institution charge you by using their products. So starting with the monthly fees here. So last night I was doing my research. I've looked up the monthly fees that a traditional bank would offer because I was curious. I work for a credit union, so I don't know what the traditional bank would charge you because here at Innovation or Innovation Federal Credit Union, we offer no fee checking accounts, so we don't have charges. So I was surprised because I've seen that they would typically charge you for $17 to $18 a month just by having the checking account. So that's the best example for the monthly fee on this section. Another one is transaction fee. So most institution they would offer you unlimited transaction fee, but in some cases they won't. So that's why we included that in here so that you are aware that sometimes banks may charge you fees for doing your basics transactions such as transfers and bill payments. The next one here, we have ATM fees. So mostly this fee are being used by the digital banks, I would say, because digital banks, again, they don't have physical branches. So therefore, most of their clients, they're being asked to use a third-party ATMs in order to do their transactions, such as deposit money and withdrawals. So that would sometimes cost them to pay fees, and that's why you are being charged ATM fees. And then the next one here, we have NSF fees, or also called as no sufficient fund fees. So this is being charged when you don't have enough balance in your account and you have an automatic that came into your account. So the best example I would say is a car loan payment. So if you have a car loan payment that is being taken out automatically into your checking account and you don't have enough balance in there, if it pulled out of your account, it would cause your account to be on a negative balance, so you will charge NSF fees at the same time as an overdraft fee. So they're being charged together at the same time because again, you don't have sufficient balance, now your account is on negative. The last one here is e-transfer fees. So most banks, they don't offer unlimited e-transfer transactions. So that's why, again, I did my research last night. I was scrolling through the banks. I was doing my research on how much would a typical bank charge for an e-transaction fees. So surprisingly, they do charge you if you went over their limit, which I think it would be around 30 transaction per month. So that's what a typical bank would do. I don't know again because Innovation offers unlimited e-transfer fees because which is such a great thing. So if you're banking outside credit union, just please watch out for those fees. It's very important that you know how much you're being charged. So yeah, that's the fees that we're talking about. Any questions? Okay, let me just check. Oh, it says where will this be saved so I can rewatch it? Yeah, we
You're
can put it.
you're okay with that, Erica. Just I'm answering that in the chat. Go ahead.
Okay, perfect. Next slide, please. Okay, moving forward to our common financial products. So this is an extension with our conversation with the checking and the savings account. So in this slide, we're going to talk about the credit card and the debit cards, and I would also touch base on their differences. So a credit card here, this is ideal for students like you because most bank they would offer you with lower limit and a card with no annual fees. So this is also a great product because it helps you build your credit score and create the habit of paying your loans on time because credit cards has statement cycle. They also have minimum payments and due dates. So you have to watch out for those dates because it's very important. Because once you've oh, I got distracted with this admitting, but anyway, because once you're past due your payment, it will definitely affect your credit score. So watch out for that as well. And although credit cards, they often have higher interest rate, I would still say it's a great product because if you use it for everyday purchases, it usually comes with benefits. So benefits such as points, rewards that you can use towards like a traveling, or it also has health insurance and travel insurance that sometimes you don't get anywhere, and it also an additional cost if you're going to get it somewhere else. So I would say it's very important that you have a conversation with a financial advisor when it comes to choosing a credit card because it's case to case basis. So you need to a financial advisor will definitely help you pick the right credit card for you. And yeah, just have a conversation, book with them, and then you'll be able to figure out what credit card works best. And then on the other hand, here we have the debit cards. So the debit cards are the opposite of credit cards because this type of card doesn't allow you to borrow and earn points. So debit cards are also ideal for everyday purchases without the pressure of it being a borrowed money. So I know some people they don't like the idea of I think someone is not on mute. I'm sorry. Okay, some people they don't like the idea of using a borrowed money, so a debit card will be a perfect product for them. I guess the only downside of using a debit card is because instead of earning points, instead of building your credit, it's not really helping you because it's just a typical a normal card that you use for everyday purchases. Yeah, I will just pass on this session to Jillian.
All right. Thank you, Erica. As Chad said, I'm Jill. I've been with Innovation for 18 years. So if you have any questions, shoot them our way. I'm going to discuss credit and debts with you. So credit and debt are related, but not the same. So credit is the amount you can borrow from your financial institution. For example, a credit limit. And when you use this credit, it then becomes debt, such as a credit card balance, which then becomes the amount you have to pay back. Next slide, Chad. All right, so we always look at the 3 C's of credit, character, capacity, and collateral. So character is your reliability, often measured by your credit score, your references, and stability in your residence or job. It shows your willingness to repay debt. Capacity is your ability to repay debt, assessed by comparing your debt obligations to your income. So a common measure is the total debt servicing ratio, which we look at your total income divided by your monthly payments gives you your debt ratio. So we don't like that to be over 40%. This threshold is set just to be in the best interest for our members. So believe it or not, I have declined a doctor or a student loan for their child because they were over that ratio. So you can have large income, but you can also have utilizing your large debt ratio or payments each month. So you can max that out real fast. And then we look at collateral, which is the assets you pledge as a security for a loan. So well-secured credit is valuable. Character and capacity are equally important in a loan assessment. So we look at all 3 together. Next slide, Chad. All right, so a credit score. What is a credit score? Your credit score affects your ability to get credit and reflects your willingness to repay the debt. If you're new to credit, your score might be low, but it will improve with responsible financial behavior. If your credit score is low, you might need a cosigner who is legally required to repay the loan if you don't. So missing your payments can negatively impact both you and your cosigner credit scores. So that's probably not something you want to do if you get your mom to cosign. She won't be very happy if you are not paying that loan and she has to pay it, and then it hurts both of your credit scores. Factors affecting your credit score, so payment history, paying on time, the amounts you owe, you want to make sure you don't go over any balances, and types of credit. It lets us know how many revolving credits you have, like a credit card, if you have a mortgage or a secured term loan. Recent credit applications, so it does let us know how many places you've applied, and inquiries. So if you're out car shopping, this is a big one we get. Don't let every dealership check your credit score, because it's going to show all of those dealerships inquiring on you, and that will bring down your score. So just go in knowing that you have a good score, or check what your score is once, and don't let them ding that every time until you do pick the car. Length of credit history. So being young, you won't have a long history, and then we can see the history of when you started. So if anything's paid off and if anything's gone to collections, it lets us know everything. All right, so next slide, Chad. So how to build a credit score as a student. I will first speak to that we use Equifax and TransUnion. So those are two reporting companies. They range, so you may have a 700 Equifax, but your 700 TransUnion, they don't mean the same thing. So they're graded differently with each company. So your credit score affects your ability to get credit. Oh, just wait, we're going on a different slide here. Sorry. Your credit score shows how responsible you are with borrowed money. So know your loan type and repayment obligations. Use credit cards for small expenses and loans for larger ones. So you don't want to put a big loan on a credit card, because that will eat you in interest. So that's usually a higher interest rate. Always pay on time. If you can't pay the full balance, at least pay the minimum, which your credit card statement will show that as well. And keep your utilization below 25 to 30% of your available credit. So again, don't max it out. Don't let it go over the limit. Stay within a good range and showing that you can pay it down. Regularly check your score. So there is apps that can show your score, and see where your range is at. It does say we start at 300. Usually those drop off because they're not worth having a score that low. But I have seen 400, 500, 600, all the way up to 900. So start with a secured credit card, or if you're new to credit, some financial institutions offer that. They usually start out a $500 limit just to keep it manageable. And apply for credit only when necessary. So don't just go when they offer you a credit card or at certain stores, see if you qualify at Walmart. I wouldn't take those opportunities unless you really need it, but there's usually, again, do your research, see where the better credit is, and if you get points or what their annual fees are. And then check your credit report and dispute any errors, because there is mistakes. People can report, or financial institutions can report an error if you have a missed payment. Maybe you didn't actually miss that payment, but it's reporting negatively on your report. You want to make sure to get that corrected to bring your score back up. So next slide. Any questions before we start the next slide?
Hi, I have a
Yep.
question. Yeah. My credit card, I think I had a 2,500 credit card, and I spent about 2,400 on it. And then I was gonna pay it back, but it looks like my credit dropped by 20 before I paid it back. But once I paid it back, I think they increased my credit by like 70 or 80. So I was just trying to ask, it does the amount of money you borrow, the amount of money you pay back, does it also influence the amount of credit rating you're gonna get once you pay it back? Like the lower the money paid back, the lower the credit rating, and the higher the money paid back, the higher it's gonna affect it. Just trying to clarify.
I don't know if it directly goes each month. Maybe Chad can help me out with this one. I don't know if it's going to directly affect. Of course, paying the full 2,400 back onto the card is going to help get your score up. I don't know if it directly fluctuates. If you didn't go over, you paid it down within your grace period, which I don't think it's going to.
Yes.
Well, one of the things I will add a little bit to this. One of the things that credit like Equifax and TransUnion look at is credit utilization. So if you have if that's the only trade line you had was a $2,500 credit card and you were at 2,400, you're pushing that 90% credit utilization. And the higher that credit utilization is, the lower your score is going to be, because it indicates that you're spending more than you're making and you're always using credit. TransUnion and Equifax recommend to be, if you have to be in your, if you're using credit cards for whatever reason, you have to carry a balance, be around that 30 to 35% range for credit utilization, because then you're not utilizing all your credit. Paying it back on a regular basis brings it down, but that credit utilization is one of the is an indicator of credit score. So if you're always maxed out on your credit cards, you're probably going to have a lower score than someone's at that 30 to 35% utilization.
Oh,
But if it's
okay.
within the same month, it shouldn't affect it drastically. So I don't know why it changed, if that was, or if it carried over each month. Like, how long was that it changed on your credit score?
The change was just it stayed for a while. When my credit score dropped, it was there for close to a month. But then when it was recorded, when I paid back, it took like 2 weeks or more. I think 2 weeks before it could reflect back, and then my credit score jumped significantly.
Right. That sounds right. I mean, I don't check mine that often. I don't check my members that often, but I did have a member that had a low credit score, and we paid out her credit card, and the next month her score went up 100 points. So
Oh, wow.
it probably does differ, but I just don't check them that regularly either. So
Okay.
So
Thank you.
that could be a thing. It's not drastic. I mean, 20 points isn't drastic for your credit score to fluctuate.
Okay.
Does that answer your
Thank
question?
you.
I wouldn't stress over
yeah.
20 points.
Yeah. Thank
Does
you.
someone else have a question too there?
Yes, I have. I'm the one who raised their hand.
Okay.
I have a question because I just curious. How come going? How how come that my credit score is dramatically going down? Because I noticed that um I'm not missing payments. I'm not missing payments. I always pay it 1 week before the due date, and I never even paying the minimum amount. I'm paying the
More.
whole amount of the what it mentioned through my credit cards, because I'm always checking my online every month. So I every first week of the month, but most of my due date is always end of the month. So that's why I'm just doing that pattern for me so that I will not miss anything. So I'm not missing payments. I'm not missing amount. I mean, I'm not paying the minimum amount, but my credit score is always going down.
It might be, again, what Chad said, the debt utilization, how much the balance is versus the limit. Because if you don't have late payments and you don't have any collections, you're making them more than the minimum payment. It just might be something with the debt utilization on there.
Yeah,
And not paying them completely off, like maybe pay one off.
Yeah.
It's hard to tell.
Yeah, it's
without
hard to
looking at
tell
it.
without actually seeing your credit bureau as to why it is. There's a number of factors that go into a credit score, such as credit utilization, the timeliness of your payments, the amount of credit inquiries that you're making. Like if you're applying for 5 or 6 different credit cards within a month, it impacts your credit score. And also, of course, if there's any derogatory or collections or judgments or anything against you. So it's hard to say. I do recommend that if you do have any questions, you can reach directly out to Equifax and TransUnion and request your own credit bureau, and ask them questions as to there's lots of information on their websites as well too about what affects a credit score. And I do highly recommend that you involve that. We don't do the scoring. We just look at the results. So those would be the experts that I would refer you to. Yeah.
Okay, it is possible that you can put it in the meeting chat. What is the recommendation that you just mentioned? Where do I need to call or to check that?
Oh, it's on the previous slide, Chad, just the names, the Equifax and TransUnion, but he can put that in the slide too.
I'll
Or in
try
the
and
chat.
I'll locate the web addresses for them and get them in the chat. Yeah. Okay.
Thank you so much. One more thing. So what will be, they have a specific amount that we need to utilize so that we can have a good score, or we can maintain at least the score, because I was um 2019 or 2020, I have more than 800, nearly 900 score, credit score that I have, but now it's down to 725. So I don't know if because of the amount that I'm using every month, do I need to have a specific amount that we need to use?
725 is still a really good score.
Yeah.
So I wouldn't stress about that, but like Chaz, we said like 25-35% utilization, but then you can pay it off. So there's no like set amount that you need to use. If it's a $10,000 limit, I wouldn't go use 5,000 every month unless that's what you're spending on it. It's not, there's no set amount or rule. It's just paying off, using, paying paying down as much as you can. There's no,
No
it's
specific
not
amount.
sitting at
Okay.
the 99%, but
Okay.
does that
Thank
help?
you.
Mhm,
Yeah.
You're welcome. Any more questions?
I think there's one in the chat here.
That's okay. I'll answer the ones in the
Chad
chat.
can
here.
answer that one.
Move on.
All right, so I'm going to move on with how credit works. So credit, you request the loan, determine the principal and the loan length, how much you need, how long do you want to pay it over, and if that payment is something that works in your monthly budget, and then as well as your total debt servicing, as we spoke to. So we do have a calculator on our website that you can play around with. And then the loan can come to us. So we do have the online loan application. So if you're curious, you can apply for a loan. Remember, it does hit your credit score. And then when it gets to us, we assess it. So when we assess it, we go back to the 3 C's. We check your habits and your history. If we see you didn't pay another financial institution's loan, what makes you think you're gonna pay us back? So we have to remember that we see everything on there. So it's a promissory note that you signed the loan document to pay. So if you break that, it's not a good look on when we go to assess the loan. But if you have great payment history, it shows paid off loans, you're paying on time, you don't have late payments, it's a great look, and we can probably move on with the loan and you could receive approval. We also base it off of your income and the total debt ratio that we spoke about before. So there's a few steps in there, and then receive approval and you sign the documents. Make sure you read the fine print before you sign. Make sure you sign up for the length of term that you want, and the interest rate and the payment amount that you are comfortable with. So, and then make your payments, arrange payments as per the agreed schedule, because we will report to the credit score or your credit report, and we will show any late payments as well, just like anyone else that we read. Next slide. So the types of credit we offer, secured credit is backed by collateral. So a house, we're going to give you a mortgage, we're going to take the house. If you're going to get a car loan, we take that car. They offer better interest rates, but risks losing the collateral if you don't pay. So we can offer you a better rate because we do have that collateral. But if you choose not to pay that loan back, we're going to come for that collateral, which I don't think you want us to do. Unsecured credit is based on credit history and financial situation. So no collateral, but it's going to have a higher interest rate because we're taking a risk on you. This is based on your promise to pay, as I said. So we hope you keep that promise and you sign those loan documents and make your payments. Parents and guardians can co-sign, as I said before, to strengthen an unsecured credit application. So you may have a good score, you just may not have long history. So we sometimes do want a co-signer just to give us that extra reassurance. You promise to repay if you can't and are evaluated on the 3 C's. So sometimes we just can't do it. Next slide, Chad. So have a game plan. Budget your spending and savings. So cut back on non-essential wants, perhaps like a Starbucks or a Timbit or Tim Hortons. Maybe you don't need those every day. Focus on needs that help your future, and then prioritize to pay off higher interest debts. So credit cards are usually a higher interest rate. So make sure you pay those down first, and then work on if you have a car loan, do that one next. Usually a mortgage with a house is gonna have the lowest interest rate, so pay that last. Just depend what your situation is. And all right, so save before spending on other things, even if it's a small amount at a time. Even setting $25 to $50 biweekly into a savings, just to set aside for a good cushion, it does add up pretty fast over time. So set up a monthly transfer to your savings right there with a small amount. And then lastly, use tax shelters such as RSPs, which is a registered retirement savings plan. And then you do get the tax credit. TFSAs, so a tax-free savings account. So any interest you're earning in the tax-free, you do not have to claim as income. FHSAs, this is a newer product, which is a first home savings account. So first-time home buyers can put money into an FHSA, and then you can use it towards your down payment or part of your down payment. And then there's RESPs, which are registered education savings plans, which you can contribute to for educational purposes, and then you get grants from the government. So start saving as soon as you can, clear high interest debts first, and choose plans that offer additional contributions or tax benefits. Any questions? All right, next slide. All right, so tips to keep borrowing costs down. If you borrow more than you'll need, you'll end up paying more interest on extra funds you didn't need to begin with. So your initial purchase then becomes that much more. So figure out how much you need. Don't take extra. You'll just pay interest. And then research the complete costs of the loan. Read the fine print and understand what the fees are for and the interest you will have to pay over the course of the loan. Understand that your $500 monthly payment is not going directly onto the loan. There is a small chunk of interest that you're paying in that portion. I have had people come in and they didn't quite understand that calculation. So just understand your loan fully before you sign those documents. And we're going to make payments in full and on time. So make sure if you are a day late, have an arrangement with your banker. Just keep everyone in the know so that we don't think you just got up and not paying anymore. Know your payment dates and have the funds available so you don't incur interest or late payment fees. As Erica said, in the fees, NSF fees do add up if we have to bounce any loans or anything like that. And then there's no hidden fees to pay it down or pay extra. So some loans that you sign off on, you cannot pay down. They will charge you a fee to pay it off early. You are signed up for those terms and conditions and there's no breaking them. So you just want to make sure that if you come across funds in 2 years that you can pay this loan off without a fee. And any questions? All right, next slide. Oh. All right, how to select a financial institution. So now, how do you choose the best financial institution for what you're looking for? So does it offer the products and services you need? If you're looking for a specific product, find an institution that offers a good quality one for a low price, just like car shopping. So you don't go buy the first car that you see, you can do your research. Are the fees the same or lower at other financial institutions? And can you get a better deal somewhere else? Are the staff friendly and helpful? You'll be working a lot with your financial institution, so it's important that you like the culture of the organization and the staff because you do end up building a relationship with them as you go through the stages of life. So is there a branch near you or do you have internet access to bank online? A financial institution isn't helpful if you can't access it. Do the products and services meet your future needs? So switching institutions can be a hassle, so planning for the future and finding an institution that will have the products that you'll need later so you can save some work. And finally, have you heard good things about this financial institution? If you know that others around you are satisfied with the services they provide, you can be more confident in the service they'll give you. And next slide, I'm going to send it back to Erica.
Great. So I did touch base on this topic earlier when we were discussing the different types of institution, but this one we're just going to highlight the banks and the credit unions and the differences between them. So as I mentioned already, banks are owned by investors, so they often hike fees, they cut jobs, they close their branches where they can to help make profit for their shareholders. While on the other hand, we have the credit union again. We are owned by members like you. We keep your best interests in mind. So that means you are making the most out of your membership with us. You get to have free banking solutions such as our no-fee checking accounts. And then we also have profit sharing. We share a part of our profit to our members and our communities. And then, yeah, the more you bank with us, the more you earn through the profit sharing. So the more you will save as well. So that's just the main highlight that I would say the differences between the banks and the credit unions. And to the next slide, please. Passing this back to Jillian.
All right, so who we are. Why Innovation Credit Union, or Federal Credit Union, sorry. Responsible banking is the foundation of our organization and is our commitment to do the right thing. It's our save, earn, and give approach. Our purpose is to simplify banking for Canadians, improving our members' banking experiences, and accessible leadership. Our executive team and our board of directors have members' best interests in mind, ensuring that we provide the best banking experience possible. Next slide. Save. So we help our members save money through competitive pricing on our products and services. Along with our no-fee bank account, we offer 0 monthly fees with our no-fee account, as Erica had mentioned. So you can tap your card, tap, 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 and don't have to keep a running tally of your usage. Unlimited Interact e-transfers. So our no-fee has that. And transactions at all ding-free ATM locations with no fees or service charges. So we do charge ATM fees if it's another FI, but not at another credit union, or if it's on our ding-free list. So no requirements to maintain a minimum balance as well. Plus, you can access all the standard benefits of a bank account too, from debit cards and online bill payments to our easy-to-use mobile banking app. You'll have everything you'll want in a checking account. Next slide. Earn cash rewards. So the more business you do with innovation, the more opportunities to earn. If we are successful, you benefit. It's why we give cash rewards for everyday banking. Since 2007, members have earned over $52 million. So you can earn equity from having products with us. Then you get cash dividends based on your equity balance. So it's a win-win situation. Next slide. All right, and give. Our memberships help us give back to our communities. Banking with us helps us allocate 2 to 4% of pre-tax profits each year to our communities in the form of sponsorships, grants, and scholarships. So over 10 million have been invested back into our communities. Next slide. All right, so student banking in the financial industry. There's no-fee bank accounts. We also offer a no-fee cashback credit card. We do student loans, savings, investments, accounts, the tax-free savings and RSPs, again, the FHSA and the RESPs. We have lines of credits for our students and then student scholarships. So those are a few things we offer specifically for students. So I'm going to hand it back to Erica to discuss our scholarships with you.
Yep. So speaking of scholarships, just like what Jillian mentioned, on our website, if you're going to check our website, it's called innovationcu.ca. You're going to scroll down all the way down to the bottom. You can see the information about our scholarships. But just to give you a little bit of information about that, we give away 12 $2,500 scholarship, and then one grand prize of $10,000 scholarship to one of you guys. So you will be eligible if you are enrolled in a full-time degree, diploma, or certificate program, as long as it's in a Canadian accredited post-secondary educational institution. You will be eligible regardless of the year of study. And then if you are a resident of Canada, except if you are in Quebec, you will be able to apply in our no essay scholarship program. And then if you are an immediate family of an employee with innovation, unfortunately you won't be eligible. But the good thing here is you won't need to make purchases or any payment in order to receive the scholarship. So just please note that the deadline for this scholarship is every October 31st of every year. So this year, we have not updated the website yet. So please stay tuned. Just watch out for our updates in there. So once that the apply button has been updated, just make sure you put your applications in so we can consider you and you may be one of the winners of the prize. So you can only do one entry per year, okay? And to the next slide, please. Oh, do you have questions about that scholarship?
Yes, I have.
Okay, go ahead.
When do I need to apply again for the scholarship? Every October of
That is the deadline. So one of these days of we will make sure to update that website. So right now I've looked it up. We don't have the apply button yet. But yeah, again, just keep on checking it. Definitely we will make an announcement in our social media. So if you wanted to follow us in Instagram, we have that as well. And then we will make announcement of when that scholarship will be placed, and you can definitely place your application once it's activated.
so the scholarship the innovation is giving it's for one every year.
Yeah, we give it out every year, and you are only eligible to win one prize. So, for example, if you were picked for the 2,500 scholarship, you are not eligible to win the $10,000 anymore. So,
Oh, okay.
yes,
Okay, thank you.
you're welcome. Any questions? Okay, great. So, moving on to the educational loan. So, other than the scholarships, we also offer educational loans. So, with this section, I highly suggest that it's best to reach out to one of our consumer advisors, such like me and Jillian here, so that we can give you an expert advice because it's case to case basis. So it says here you can borrow up to 20,000 per year, but it is subject to terms and conditions. I would say you will get the most information if you reach out and have a one-on-one conversation with one of us, because we will be able to guide you with the requirements and your eligibility as well. So if you'd like more information, definitely check our website. And then we also have a way for you to book an appointment online. Just scroll down to the bottom all the way our website as well. So, yep. And then next slide, please.
Can I ask you about the educational
Oh, go ahead.
um regarding for that forgot I need to ask. I forgot. It's
That's
okay.
okay. Yeah.
Sorry,
Oh,
I will go back later.
yeah. Just
Sorry.
put it in the chat once you remember it. Okay, great. So another great thing about innovation is that we have meeting rooms and innovation hubs. So I'm not sure if you guys are based in Saskatoon, but right now we have an AC, or what we call Advice Center, in Saskatoon, located in the University College Drive. We offer free meeting rooms and innovation hubs for you guys. So if you are wanting to do some projects, assignments, and you don't have a place to do that, definitely check out our branch in Saskatoon and just book the space in there, just to make sure you have it available to you, because we offer free Wi-Fi, free office chairs, table, and a comfortable sofa. Maybe sometimes we can offer you free coffee as well. So definitely check it out. It's yeah, I don't know if they offer coffee in there right now, but definitely something that you can consider. Any question on that one and how to book? Okay, great. Let's move on. And then here, why innovation? So, because we are now national reach. So, as you already know, since 2023, innovation has become one of the three federally regulated credit unions in Canada. So, we are very proud to say that we are now able to reach more demographics across Canada. So, if you have family members, it can be outside Saskatchewan, it can be anywhere in Alberta except Quebec. Yeah, we will be able to help your family members. So it's such a great thing for our members, because now we are able to offer you competitive interest rates, competitive products that you can get to take advantage of. So if you have questions about that, just again, message us, me and Jillian. We will definitely give you our contact information at the end of the slide, and you can keep it with you. If you have questions, just shoot a message. And on to the next slide. Questions and answers.
There's just one question in the chat in regards to the education loans for permanent residence or citizenship. It is preferred. If someone is a non-resident, we can discuss options, but would probably require a guarantor of the education loan that would have to be a permanent resident. So something to think about there. All right, just checking the chat. I think we've got all the questions answered there, and I don't see any hands up.
I have one question.
Yes, please.
You just mentioned that we need to have a guarantee from either one of the either permanent residence or citizenship who can just be a guarantor for the person who wants to apply for the educational loan. That's why I asked that one. I am planning to get my sister in my home country. So if I will get her, so she will come here and then I will be a guarantor because I'm a permanent resident. So if I will be the one who will be a guarantor for permanent residents, they will be 100% sure that the educational loan will be approved or no.
Well, no, approval is based on the creditworthiness of both the guarantor and usually it's based on the guarantor because the student's going to school, they're usually not working. They may or may not have a credit history. So creditworthiness is based off of the guarantor. So we look at a number of things, as Jill mentioned. There's income, there's capacity, there's capability, credit history, things like that we take a look at. So just because you are a permanent resident doesn't mean we're 100% going to approve it, but we can definitely have that conversation. We would have to take take an interview and then update your financial picture to see where we're at. So, and of course, we don't want to do that now when a whole bunch of people are on the call, but definitely something we could look into.
Okay. And one more thing, what is the credit score that we should have so that we can have a good standing for if we wanted to apply for a mortgage loan? Because I thought that it will be discussed, but it's not there in, so I'm waiting for that.
Yeah.
So what is the credit score that I should have? Or
Well,
either for me or for my husband?
yeah, so there's no set rule as to what credit score would actually get you credit because, depending on the situation, if someone has a low credit score and if they provide security or a guarantor, we may lend to them on your own individual basis. That range, anything around from a TransUnion score, anything, well, I would say 680 and higher is something that would help your cause. Let's put it that way. I'm not going to say that we wouldn't lend anybody below that, but 680 and above is usually a fair score where you're in a good position from credit history point. Yeah.
Okay. And I just wanted to know Innovation is offering a mortgage loan. No, not mortgage loan. It's just related with the mortgage thing.
We offer many mortgages. We offer mortgage financing, we offer loans, we offer education loans, we offer revolving credit. We're a fully functioning federal credit union. We offer many of the products that most of the big 5 banks offer as well too. So yeah.
Okay. So can I go directly to Innovation to apply for the mortgage loan, or or I need to talk to my mortgage broker or my realtor regarding for to apply for the mortgage loan
Yeah.
through the Innovation?
You could call us
Definitely with
directly and
us.
apply. Yeah.
You can
Mortgage
come to
brokers,
us.
yeah.
Yeah.
We can do a
mortgage broker's an
pre-approval.
option, but yeah, you can come to us as well too. Yeah.
Oh, so you can do a pre-approval. Okay.
Yep. Yep.
Okay. So I will contact with this email or this phone number if I just wanted to get. Do you have office here in Saskatoon?
Yes, the one that I mentioned earlier, University College Drive.
Oh, College Drive. Okay.
Yep.
You are Erica, right?
I am.
Yeah, Erica, you can be there in your office also.
I am in Regina, but
Saskatoon.
I am in office. And I can be in Saskatoon if you want it. I can definitely try.
Okay.
Yeah,
Okay, thank you.
we have some other advisors that work in the
Yeah, we
University
do have
Advice Center as
advisors
well
in
too. Yeah.
Saskatoon. I can refer you.
Okay.
I just want to answer, there's just another question in the chat here around what's the maximum amount for a mortgage that can be approved for a student. It all depends. The maximum amount, again, going back to what Jill said, we look at debt servicing ratios on how much you can afford, what your income is. I can tell you right now, if you don't have any income, you're not going to get approved for a mortgage because we do have to have some sort of income to be able to service that debt. But if you do have income, it all depends on what your income level is, what your credit history is, what your down payment is, and other things as well too.
Another thing to add on to that, Chad, it says a student to get a mortgage. So if the student is using a student loan or some other funds while you're going to school, then we still can't qualify you for a mortgage until you have steady income.
Yeah.
So there's different forms of income.
There's another question about online advisors. Yes, actually all of our advisors, whether they work in an office, Jill works here in North Battleford, Erica works in Regina. We do a lot of business in dealing with members and potential members over the phone. Or sometimes we'll have a Teams meeting with them and be able to do that. And we have ability to be able to get documents for electronic signatures and all that sort of stuff. So yes. Okay. All right.
One more thing. I
Yes.
just wanted to know if I will apply for the mortgage loan, do you have the app that I should look at to enter all our information? And then I wanted to know if how much the debt that we should have at least, because of course everyone have debt. So if how much it's supposed to be you should have so that the pre-approval will be higher.
For down payment.
Yeah.
Yeah.
So down payments can
No.
range. Oh,
Because for the mortgage,
there's
I
a
think
mortgage calculator on our website as well that you can enter everything in.
can I go to innovation website also for that calculator?
Yep, it's under tools.
Okay. And for the pre-approval, do I need to book an appointment or can I go to your website and do that?
Either or, there's online application.
Okay.
If you apply online, you will be contacted by an advisor to interview you and find out some more information that you're not going to be able to submit online. So, yeah, we'll be in contact with you if you submitted one. Yeah.
Thank you.
Okay. All right. We are coming up at 4:30. I don't want to hamper any questions. Deborah, I think you had a question there on percent down for a house. It all depends. The lowest you can get away with is 5%, in which we utilize CMHC and Sagen. They're a high ratio insurance provider for lenders to be able to lend 5%. But that's the lowest that you can do. And actually, you can put as much down as you wanted to, but 5% is the minimum. So, okay. All right. Well, thank you very much. I want to thank Erica and Jillian for providing the information and being able to answer the questions. I really appreciate the questions that were asked from the participants today, and I really appreciate you joining us today. On the screen here, there is Erica and Jillian's contact information. If not, there is, you can call Innovation at any time at 1-866-446-7001 to be able to get that. We'll get that in the chat as well too. In addition to that, please watch your emails. We will be sending out a feedback and suggestion form for you to fill out. Highly encourage you to recommend that you fill it out. We use that to make these presentations better and take all the feedback from all of you. So if you could, thank you very much if you could fill that out. And I did mention at the beginning of the chat there, if you are wanting a link to the recording here, please put that in the feedback form and then submit it to us, and we'll make contact with you. We'll make contact with you and make arrangements for you to get that. So yeah, okay. All right. That being said, thank you all for attending.
Thank you, everyone.
Have a great afternoon.
Thank you. Bye.
Thank you. Bye-bye.